Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, July 23rd, 2025, our focus is squarely on Intel Corporation, ticker symbol Intel, as we head into a pivotal Q2 earnings report tomorrow. Current news paints a complex picture for Intel, creating a catch-22 scenario, implying significant challenges without easy solutions. Yahoo Finance highlights this uncertainty, while other outlets like Zacks Investment Research ask if you should buy the stock ahead of earnings. Compounding this, Intel is reportedly set to announce its sixth consecutive net loss, with revenue expected to drop for a fifth straight quarter. This continued financial struggle is a major concern for investors. However, there's a strong counter-narrative of optimism, particularly from Seeking Alpha, which points to an asymmetric investment opportunity. This optimistic view is heavily attributed to the new and proven CEO Lip-Bu Tan, signaling high hopes for a significant turnaround under his leadership. Analyst consensus, compiled from 29 analysts, reflects this cautious yet divided sentiment, with a collective hold rating. The average price target is set at $22.38, implying a slight potential decrease from INTC's current $23.24. Yet, the individual price targets span a wide range from a low of $14 to a high of $29, showcasing the deep division and uncertainty surrounding Intel's future. The market's reaction to tomorrow's earnings report will be the immediate catalyst determining which of these conflicting narratives gains dominance. Now, let's turn our attention to the daily chart to visualize how these news events have manifested in price action over the past year and what it tells us about key levels. From March 2024, Intel was trading in the mid-$40s, but it entered a clear downtrend. We observe a dramatic and highly significant drop in early August 2024. Specifically, the candle on August 2nd saw the price plummet from an open of $30.43 to a close of $21.48, with a massive volume spike of over 300 million shares. This sharp decline correlates directly with the news reports of Intel's prolonged financial struggles, indicating a strong negative market reaction to what were likely disappointing results or guidance. Following this major leg down, Intel struggled to find solid footing, eventually establishing a critical historical support level around the $18.13 mark in early April 2025. This $18 to $19 zone has proven to be a robust floor in our data, representing a key level to watch for potential reversals if revisited. The sheer volume accompanying these sharp movements underscores the conviction behind both the selling pressure in August 2024 and the subsequent attempts at price discovery lower down. Despite the overall downtrend, the daily chart also shows periods of strong bullish reversal and significant volatility, particularly noticeable in early 2025. In February 2025, Intel experienced a powerful rally, surging from under $19 to a high of $27.55 by February 18th. This impressive upward move, accompanied by strong volume, strongly suggests the market's enthusiastic response to the new CEO's appointment and the emerging turnaround narrative. However, this rally found substantial resistance around the $27 to $28 level, which has since served as a significant long-term ceiling. After this peak, the stock corrected sharply, retesting lower levels before entering its current consolidation phase. The current price of $23.24 positions Intel squarely within the broad analyst target range of $14 to $29. However, it's worth reiterating that the stock is currently trading above the average analyst price target of $22.38 for the next year, implying a cautious outlook from the analyst community. Historically, the $24 to $25 area has acted as a recurring resistance zone, capping rallies in late September and November 2024, and again in mid-March 2025. Overcoming this resistance will be crucial for any sustained upward movement. Let's zoom in on the hourly chart to examine INTC's more recent, granular price action leading up to tomorrow's pivotal earnings report. Over the past few days, specifically since July 14th, Intel has been trading in a relatively tight range, oscillating between approximately $22.90 and $23.80. The stock currently hovers around the $23.24 mark, displaying clear signs of consolidation and a lack of strong directional commitment. Observe the relatively stable, non-spiking volume in this hourly range, indicating a pronounced wait-and-see approach from both retail and institutional traders ahead of the earnings call. This sideways movement is a classic pattern of market uncertainty and anticipation before a major news catalyst. Immediate support in this timeframe appears to be holding around $23, which, if broken, could lead to a quick retest of the $22.50 to $22 region. On the upside, immediate resistance is visible near $23.50, with a stronger psychological and technical barrier at the recent high around $23.80. A sustained break above $23.80 on meaningful volume would signal a strong short-term bullish momentum leading into earnings. Conversely, a decisive breakdown below $23 could open the door for a sharper decline as pre-earnings jitters take hold. To get an even finer perspective, let's switch to the 15-minute chart and analyze the very short-term patterns that could indicate immediate price movements. Focusing on the last 24 hours of trading, from July 22nd at 13:23 Universal Time Coordinated, we primarily observe minor fluctuations, with prices largely contained within the $23.20 to $23.40 range. Volume on this ultra-short time frame has been relatively consistent, without any sharp, decisive surges that would clearly indicate significant institutional buying or selling pressure. The prevalence of small-bodied candles and occasional longer wicks on both sides suggests deep indecision and a tug-of-war between buyers and sellers, characteristic of pre-earnings trading. The immediate support on this specific time frame is around $23.15, which has been tested several times without a significant breach. Overhead, resistance is found at $23.40, a level that has prevented sustained upward moves. For day traders or those looking for very short-term opportunities, these precise levels are critical to watch for potential intraday breakout or breakdown opportunities once a catalyst emerges. Any unexpected news or major order flow hitting the market before tomorrow's opening bell could trigger rapid and volatile shifts on this granular time frame, making precise entry and exit points crucial. So, bringing it all together, what does this in-depth analysis suggest for trading intel, especially with earnings looming? For the immediate short term, going into tomorrow's Q2 earnings report, extreme caution is paramount. The market is highly uncertain, reflected in the Catch-22 news and the tightly consolidated price action on both hourly and 15-minute charts. A bullish scenario, with a 60% likelihood, could see Intel push strongly towards the $24 to $25 resistance zone. This outcome is highly dependent on Q2 earnings delivering a genuine positive surprise, coupled with robust forward guidance indicating a clear, accelerated path to profitability and market share gains. Should Intel convincingly break above $25 on strong post-earnings volume, it could then target the significant long-term resistance at the February 2025 high of $27.55. This would be reinforced by positive analyst revisions and a shift in market sentiment towards the turnaround story. Conversely, a bearish scenario, with a 40% likelihood, would see the stock retesting the immediate $22.50 to $22 support. This would likely occur if earnings disappoint, guidance is weaker than expected, or if the market perceives a lack of progress in the CEO's turnaround efforts. A sustained break below $22 could open the door for a retest of the strong historical support at $18.13. Breaking this $18.13 level on high volume would be highly concerning, potentially validating the more pessimistic analyst targets around $14. For long-term investors, the asymmetric investment opportunity, articulated by seeking alpha, hinges entirely on the new CEO's ability to consistently execute a profound turnaround strategy. If subsequent earnings reports demonstrate tangible and consistent improvements in revenue and profitability, patient investors could see substantial long-term returns, potentially reaching or exceeding the high analyst target of $29. However, this demands navigating the significant headwinds of persistent losses and intense competition in the semiconductor space. Key things to look for beyond the headline numbers in tomorrow's report include management's detailed commentary on data center growth, progress in their AI initiatives, and the long-term outlook for their manufacturing and foundry segments. These strategic updates will provide crucial insights into the viability of the turnaround. Remember to always employ strict risk management, whether through stop losses or position sizing, especially during high volatility events like earnings announcements. That wraps up our deep dive into Intel today. Thank you for watching Explain the Charts, and we'll see you in the next video.